What is going on, investors? Hopefully you guys are doing well out there. Now it's time to talk about Disney stock, which if you own a couple of shares, you're feeling really good right now. During the regular session, the stock was up 3.33%. In the after hours, up nearly 7.33%, up to about $159 per share. We'll talk about what this means from a technical perspective on today's show. Now, what's popping the stock? Q1 earnings came out, and boy, revenue really came in strong at $21.8 billion. Hello, that's up 34% year over year. This ain't a tech stock, this is Disney, and they got 34% revenue growth year over year. They beat expectations by $860 million. Really strong on that. We'll show you what Disney did in the most recent quarter that is surprising everybody, and the reason why this stock is popping. I thought it was going to take at least into the summertime to what they did in the most recent quarter over at Disneyland and Disney World. They've virtually done it overnight at Disney. Really impressive what they've done. I think the management and certainly the employees of Disney really deserve a lot of credit. Now, in the after hours, the CEO of Disney said we're, quote, bidding on it. And what he's talking about is the NFL Sunday Ticket, which is currently owned by, or the rights are owned by AT&T's DirecTV. It's basically a package that allows you to view out-of-market NFL Sunday games. Now, that contract doesn't expire until after next year's football season. So we've got the Super Bowl that will effectively end this year's football season. We've got next year's football season. It's the football season after that that is essentially up for grabs. Unless this contract gets worked out a different way, the NFL can do really, quite frankly, whatever they want. But it appears that Disney is bidding on this. Now, unfortunately for Disney, the rumors have it that both Apple and Amazon are also bidders on that. And particularly when it comes to Apple, they have virtually an unlimited budget when it comes to these types of things. And that's because the company has several hundred billions of dollars of cash sitting on their balance sheet, basically depreciating due to inflation. And so while it might be a positive from a press release perspective and a content perspective, if Disney wins the rights on these NFL Sunday Ticket, it will come at a gigantic cost, because I can't imagine Apple and Amazon sitting on the sidelines and pinching pennies when it comes to a property like that. So we'll see what happens with that. I'd actually be a little surprised if Disney ends up with the NFL Sunday Ticket. And quite frankly, as a shareholder, I kind of don't want them to end up with it, because I think from a cost perspective, certainly when we jump into these numbers, I'll show you these sports rights from college football to Major League Baseball to really across the board is really eating at the profits in that segment. So we might not want Disney to actually win that bid. We'll see what happens. Now, let's jump into the different business units that Disney operates. So they consolidate things on their revenues, and we'll show it to you kind of from a full version as well. We'll take a look at the financials, we'll take a look at the revenues, the profits really quickly over at Disney. But I want to show you this because this is really what you need to understand with Disney. So they've got this Disney Media and Entertainment division. This is essentially ABC, ESPN. This is all the movie networks, Disney Channel, all that type of stuff. Revenues in that segment of the business came in at $14.58 billion. Last year, you're sitting at 12.6. That's solid 15% year over year growth on the revenue side. Now, unfortunately, we've got our operating income down here. Notice that went from 1.45 billion all the way down to $808 million. So a $14.5 billion worth of revenue. We only made, I say only, $808 million. That's down 44% year over year. And I dug through the press release. They blame those sports rights from college football to Major League Baseball to the cost associated with covering those games. They blame those costs. And also last year, you didn't necessarily have some of those costs as games were delayed and maybe put off for a little while and maybe had slightly lower budgets and production value. Well, those accelerated in the last year as states and events started to reopen, and Disney felt the brunt of those costs. Now, that's not the full story. Obviously, the stock is not popping in the after hours because of the decline in that business. Now, the decline in that business was somewhat predicted and somewhat telegraphed by the stock market. What wasn't telegraphed by, I don't think, really anybody was the comeback in the Disney parks experience and products. This is essentially Disneyland and Disney World. Take a look at our revenue. It went from $3.5 billion last year all the way up to 7.2 billion. Hello, you might be asking yourself, well, what was the revenue back in 2019? Let's flash back when times were simpler and we weren't in this global pandemic that we are in. We'll take a look at where revenues were in. This is the exact same quarter just 2 years ago. We were sitting at right there at $7.4 billion. So we just put up a quarter essentially equal. We're basically back where we were, and we still see restrictions, okay? Yes, out in Florida, over in Disney World, it's a lot looser out there. Out here in California, it's marginally loose, especially where Disneyland is in that county. Not all of California, but where Disneyland is, they understand how critical that segment is to that area, the area's economy. So they've been a little bit looser in that county than they are in other parts of California. But what we are starting to see is a softening across the board. Now, I don't know if this is based on science. I don't know if this is based on medical research, or if this is really based on the fact that we've got elections coming up here in the United States, and a lot of these mandates aren't super popular with virtually any voters. We'll see what ends up happening, but what this can do is change the perception of people, okay? You start loosening these things up, people might seem even more comfortable taking the vacation, taking the kids out to Disneyland. I'll let everybody make that decision for themselves, but certainly a news cycle and news coverage on this and encouragement from the government might even encourage more people to take their kids to Disneyland. But I tell you what, over the last quarter, we have seen a resurgence of that with $7.2 billion worth of revenue. And I talked about how in the previous 2 years ago, we're basically near or at that revenue mark. Now, what's even more impressive is we've talked about here on the show extensively how the Disneyland Parks division was essentially break even, or they were losing money initially. They did a nice job at cutting cost over there, running at a lower and kind of a reduced capacity. We'll take a look at our operating income, came in at $2.45 billion. Hello, growth. Last year, we lost $119 million. Again, you might be asking yourself, where the heck were you in 2019? Well, we were at $2.3 billion worth of operating income. So we're all the way back and more, baby, on Disneyland. And I tell you what, we start to see a softening of these restrictions, and maybe more and more people want to get out to Disneyland. It's absolutely an exciting time to be alive, especially if you're a Disney shareholder. Now, let's take a look at these call it $21.9 billion worth of revenue. We had $19.6 billion worth of cost. You come down here to income. After you pay some interest and taxes and all that, they really just flow you all the way down to net income over at Disney. You made $1.1 billion. Again, we know that's mostly coming from the parks division. So if they can get the cost under control from the sports divisions of their broadcasting, well, I tell you what, this company is on fire when it comes to operating income, likely in the coming quarters. You see, last year you made just 17 million. I mean, it's basically break even, and you've swung all the way to a $1.1 billion profit. The investors absolutely love that. Now, from a balance sheet perspective, this kind of relates to the NFL Sunday ticket. We got $28 billion, $14 billion in cash, another 15 or so in receivables. Total current assets are $32 billion. We know, if you follow this channel, Apple does $32 billion in net income, or certainly operating income, in a quarter. So Apple does Walt Disney's current assets in a quarter in operating income. So you can imagine, if Disney is competing against Apple for rights to the NFL, well, it's going to be an uphill battle. Otherwise, you're going to have to blow up this balance sheet. This company still has some debt, $47 billion. A little bit of it is current, up here at $6.7 billion. This company, look, it has plenty of cash. This balance sheet is nice, but when we start comparing it to Apple and we're bidding on sports rights, this company is likely going to start losing out on those types of things. That's why it's so important that Disneyland, the parks, the experience, this segment of the business is already back. I thought it was going to take well into the summertime at the earliest, and here we are at the beginning of the year, and this company's already back. It's just really impressive what Disney has done, and it shows the strength of that brand. It also shows up probably a lot of pent-up demand too. People with young kids, they don't want their kids to get so old that they won't like Disneyland, and so you see just people rushing back to the parks. It's just really great to see, and I'm really excited to see it, quite frankly. Now, from a financial perspective, everything looks good. From a cash flow perspective, we're still negative on those cash flows. In fact, we're negative by $209 million. But again, the stock is moving in the after hours. I don't think anybody's buying this because of the cash flows. We see an investment in the parks went from 760 up to 981. All things else, there's not not a lot going on here. I think investors are super excited about the comeback in this parks division. They know that things are really feisty on that media rights division, certainly the sports as well. And so it could be that Disney starts to lose out on some of this stuff. Maybe Apple gets their leg in the door for NFL rights. We already know that Amazon as well. Well, that could reduce some of the cost for Disney, but if they're able to still retain a lot of advertisers on their pre-game shows, their post-game shows, SportsCenter, ABC, well, it could actually be a little bit better from a profit perspective, because those games, when you have NFL rights, NBA rights, MLB rights, those are effectively sponsorships, okay? The companies don't make a lot of money, certainly like the Super Bowl as well. CBS or NBC or whoever's covering the NFL, the Super Bowl, really does that to promote the other things, the other shows, the other very profitable sitcoms that they have airing on the network. It's not really to drive money to the bottom line. And so it could be that maybe in the coming quarters, maybe in the coming years, I'm kind of thinking out loud here with Disney, but maybe they start to shift their focus. The other thing that we know that this company has shifted their focus to over the last few years is really this digital media. So we've got Disney Plus, we've got ESPN Plus, you've got Hulu. And what we're seeing really across the board outside this standard video only on the Hulu is you're seeing they have pricing power here, okay? And when you look at these average prices paid, this is well below a Netflix and certainly well below any kind of traditional TV, except for kind of, live Hulu is essentially almost like a cable subscription. So that's up at $87, but that's still probably south of a lot of traditional cables, DirecTVs, AT&T's out there. So they've got a lot of room to pricing power in here, and you can see that they're able to drive the prices up over the last year or so with Disney. Now, the last thing we'll look at is from a technical perspective. This thing really broke down. I did buy a couple shares in my son's accounts when it got to these levels. I didn't get it at the low. I thought actually we had reversed right in here when we had bottomed out here at 143. I probably got in here at the 150, so I'm not up a big time on the shares because this stock hit a level of resistance here at 158, got rejected all the way down to the 130s, and now we've gapped up here. We're actually at, I wouldn't necessarily call this a critical level, but it's an interesting level, right where the stock is trading in the after hours, right at 159 or 160, right in that range, because we got rejected there back in January and the stock dropped nicely. So really what you'd like to see with Disney is get a candle up above that, but unfortunately for Disney, we've got another key area of resistance up above here at about 168. It really would not surprise me at all if Disney makes a move, if the momentum stays in Disney's favor, it makes a move up here to 168, but likely fails at that level. That was a critical level, and once we broke down from 168, we came down to that 130 level, and now here we are kind of back at this level. Who knows what would send it over and above this? I tell you what would be very bullish for Disney if you were to get up over 169. That would trigger some momentum buying as well. But my prediction, I hate making predictions, but I think a lot of people like to kind of hear this type of stuff. I would actually expect Disney stock to fail somewhere in this 160 range, hit its head on this 167 range. So if you don't want to be in a hurry to buy this one, you still want to be kind of in an accumulation range, I think you've got some opportunity here to consolidate between 160 and about 168 on this one. If it does break above 168, I think you could buy it still on that upside momentum, because this stock could comfortably get into the 175, 180 range if you break that level. If for some reason we break down from 168 and then we get below 159 on this one, I think you can accumulate it down here south of about 150, 155 on this one, knowing that the fundamentals, now from the technical perspective, might not line up perfect, okay, if we get rejected at these levels. But from a fundamental perspective, we love that Disney Parks is coming back. We're seeing a softening of the restrictions. I think that will not necessarily impact Disney's business per se, but it'll impact the mindset of people, and it might get even more people willing to go out into crowds of public at a Disneyland, and so to speak. And we've got to keep a close eye on the sports business over at Disney. If other companies like Amazon and Apple come in, it might be perceived as a negative initially, the fact that ESPN is losing access to certain games or ABC is losing access, but in the long run, this company is really being brought down from an operating income perspective by those sporting events. I'd like to see see Disney maybe be able to pivot away from actually covering the games and just doing kind of really good pregame and postgame and making a lot of money off of that. I don't know if that's a great strategy. Certainly, I'm not the CEO of Disney. They say they're bidding on this Sunday ticket. We'll see what ends up happening with that. I would guess likely in the coming weeks ahead as we move past this NFL season. That was Disney, now up 8% in the after hours. Really strong results from the park side. We definitely want to see strong results at some point from an operating perspective from this media and entertainment division as well. We'll see what happens in the future from Disney. We'll be here to cover it for you on the Investor Channel. Hopefully you guys enjoyed today's video. Good luck with your investments.